Gautam Shah is also joining us now. Gautam, good morning. Let's get a take from you then. We've seen a reversal in the market. Where are you seeing opportunity now, given that we're back at those highs? Are you looking at broader markets? Are you looking at those preferred names, those handful of names that we're continuing to see strengthen? Where's your attention?
Well, it's been a stupendous run. Firstly, I think given what has happened in the last 1 week, you have a scenario of greed and fear both playing out at the same time. And as we pointed out to our subscribers today, the market has moved from fear to FOMO, fear of missing out. And I think there is a short covering angle which has really led to this big move that has taken place. We ourselves were a little surprised at the pace of the recovery, but the fact that the Nifty is back at levels of 12,100, I think just gives you the indication that the market does not want to fall. You had that 800-point correction from 12,400 to 11,600. Market was looking a little toppish, particularly the large caps, and now with the budget development out of the way, the market is clearly looking much lighter, and even the global scenario is getting slightly better given the news flow that we've had in the last couple of days. So I think this recovery has to be given importance. The level that we are working with is about 12,120, which is where the Nifty is right now. And if the Nifty is able to get past this number on a closing basis, we will have to believe that the worst of the pullback is indeed over and the market can again take a shy at a level of 12,400. But I think the bigger point that I mentioned in our last interaction is that this year 2020 is not going to be about the index or the large caps. I think they will continue to just move like a pendulum in a large range of about 11,800 and 12,400, but I don't think they're going to break out or break down. And I think this year is about specific stocks, and the manner in which the mid caps for the first time in 2 years have held this market, I think is a very encouraging development, because it's the mid caps which give you the indication that they want to perk up every time there has been some news flow. So it's looking good for the broader markets. We feel that the Nifty is unlikely to see more than a 2 to 3% upside from here. But on the broader markets, on the mid-cap index, we are working with a target of about 20,000, which is a good 2,000 points away from where we are right now. So that's where the money is to be made. And, the underperformers of the last 2 years, metals, autos, pharma, these are the names that we are liking and recommending to our subscribers on a regular basis.
Right. Gautam, hi, morning. Just observing some of the steel charts as well. What's going on amidst this volatility and fear around the coronavirus? You think any of this volatility or dip, if there were to come any, is to be bought? Many are talking about as to how Tata Steel is emerging as the favorite one to really buy. What's your topic here?
Well, yes, I think metals was in a very difficult space for almost 2.5 years. If I'm not wrong, the NSE Metals Index lost 50% in value in a matter of 2 years. And post that price destruction, you've seen a nice foundation for almost 5 or 6 months. And post that foundation, you've seen that breakout. And after that breakout, the metals index rallied almost 12-13%. And it has come back in the last 4 or 5 trading sessions, which I think is temporary. So I believe that the metals recovery is here to stay. But if you have to play the recovery, you have to be in the top 3 stocks. So the stock that you alluded to continues to look like one of the best plays in the metals pack at this point of time. So yes, I would look at this space long term. Maybe on a day-to-day basis, it might not give you the kind of returns that some of the other sectors give you right now. But I think from a buy and hold perspective for this year, metals look very interesting, and we are calling for a 15% recovery on the overall index there.
All right, so that's on metals. Gautam, what were the other pockets you said, the underperformers that you're counting on? Pharma, I think you mentioned.
Yeah, I think I spoke about pharma. I think yes, so pharma topped out in 2015, and just like the metals index, it lost about 50% in value. The pharmaceutical index was at 14,000 in 2015. It came off to a level of 7,000 a few months back, and from there we've seen this nice recovery, which looks durable, which looks genuine. And I believe that the pharma bull market is only starting off. So some of the top stocks in the pharma space, have the potential to gain 25 to 30% over the next 6 to 12 months. So that's a space that we continue to like. But the overall theme which I'm trying to present here is that the outperformers of 2019 might take a backseat. And I think you've seen that in the last month and a half. And many of the underperformers, including autos, which we really like for the rest of this year, I think will give you supernormal returns. And therefore, this is a good time for your viewers, to shuffle their portfolios, because money is chasing into some of the high beta stocks. And in the broader markets, as I said, the opportunities are immense, and there are so many stocks, that could easily move up 50-100% over the next 6 to 12 months.
Right. Just looking at some of the themes and numbers which are actually holding up, Gautam, and this entire consumption theme is propping up, be it Berger Paints, the management we were just chatting with on account of their numbers, be it a PVR, forget that, other leaders in the categories, a Bajaj Finance, for that matter, an SRF, an IGL. These are all stocks which are sitting at new highs for themselves. Do you think this trend would continue, wherein the leaders of the pack will only go stronger?
Well, yes, I think so. I think consumption as a theme is clearly is coming back and will do much better. And within this theme, there are many pockets. You rightly pointed out a few names like a PVR. I would even say an Indigo is a consumption theme. I would like to put it in that bracket. And I think there are many stocks in this space, that are doing well. And in fact, within this space, gas, I think, is one theme that we really like over a longer term period. But if you look at the FMCG basket, you have a scenario where there are many stocks which are trading at 52-week highs, and on the other hand, you have a stock like ITC, which I believe is 20% of the FMCG index, is at a 52-week low. So this is a market where you cannot just go with the index theme or the sector theme. You need to pick the right stocks at the right time, and the winners of the last 3 months, I think, will continue to do well, because there is more and more commitment coming into them on a daily basis. So I don't think this is going to end. So till we are broadly positive on the Nifty, the consumption theme is here to stay, and one should stay overweight.
Okay, so continue to stay overweight on the consumption theme. That's Gautam's view coming in. Gautam, what about pockets like real estate, infra, anything catching your eye there? Any of those cyclicals that you feel could provide an opportunity on a rebound?
Oh yes, I think real estate stocks have done phenomenally well. I mean, look at what DLF has done in the last 1.5 months. I think it's up 50%. There have been many times in the last 2 years where real estate has done well for a very short period, and the rally has got sold into. But this time, for the first time in 2.5 years, the rally is not getting sold into. And I'm of the opinion that this rally is here to stay, and you are likely to see far more price appreciation in many of the top real estate stocks. So I wouldn't, get into the mid-cap real estate, but the top 3 or 4 names look very positive, and I think this is also a comeback which the market is clearly giving you a hint that it's here to stay. So yes, this goes with the theme which I presented earlier of the underperformers doing well, and real estate and infra pretty much falls in place.
Okay, so that's real estate and infra that we're tracking as well. From the preferred plays in the Nifty basket, Gautam, and we all know what those names are, but which would be the ones that you see showing the most ideal return scenario now going ahead? Because given the valuations and multiples are already trading at, where do you see real maximum opportunity, or do they just remain safer bets?
Well, I think we are very clear with our view that this year is not about the index. I think we've made this point many times in the last couple of months. The market will stay in a range. The market is not enjoying the kind of leadership from the large cap stocks that it did in the last couple of years. And I think the pockets that could help the Nifty move towards levels of 12,400 is IT and Pharma. Because if you look at the IT stocks, they have been rock steady. Anytime any development in the world, it's the IT stocks, where people run into. 2.2, and the index is close to a lifetime high. And if the current level is taken out, I think 1,000-point move on the IT index is possible. So that looks very interesting, large cap and mid cap, and pharma obviously is out there. Along with these two, I think oil and gas is another space that I like. Given what Reliance has done in the last 7 days, I think it's now come to a point where it's once again looking lucrative on the charts. So these three would be my best bets. Banking, which has always led the market in the last 2 years, is now taking a back seat because many of the top banking stocks are looking a little top heavy, and I don't think they are going to contribute as much as they have in the last many months. So not very positive on banking, but I think other sectors will help the market stabilize at every dip.
Gautam, good to have you on the show. Thanks much for stepping in today.